What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'll be taking an exam today, and I told you guys in my previous video, make sure you hit that notification bell so you don't miss future videos, because I am popping out videos. So a lot of you guys are asking me dividend investing tips. So I'm going to be kind of brief with this, and I'm going to give you my tips. So I have like five criterias. So one, is it in demand? Is this dividend stock, this company, in demand? So that's always important, because if it's not in demand, you're at risk for dividend cuts, you're at risk for terrible dividend growth, you're at risk for getting delisted. That can happen with some of these stocks, especially if they're high yield dividend stocks and their price per share decreases over time. What happens if they get delisted? Then you're screwed. So that's one thing that I look into. Revenue. Is there an increase in revenue? Has the revenue been stagnant or is it increasing? So that ties into number 4 with dividend growth. Same with number 1 with demand and dividend growth. If they're selling products or bringing something to the table that people need and want and use on an everyday basis, that's very important. So I'm going to use a stock, I'm sure you'll know which one. Take a hint. And the biggest thing is diversification. So there's certain sectors with dividend stocks and certain stocks. There's sectors. There's real estate. There's financial sector. There's consumer discretionary. There's so many sectors. So it's always important to be in certain sectors. So you can't just be in one sector and be in the financial sector. That's why I'm well diversified. Another big thing is dividend growth. When you look at dividend stocks, I want dividend hikes. I want to raise. I don't like things stagnant. Things being stagnant is not fun because you're not getting growth. What happens if the price per share decreases? And again, it goes right back to number 1 with demand. If there's no demand, there's no dividend growth. There's such a strong correlation with that. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But that's one thing that's very important, because all these tie into one, except number 6 with bonus points. And then number 5 is pandemic or recession proof. So if a pandemic happens, like for example, EPR Properties, they suspended their dividend distribution because obviously they weren't in demand. They're for entertainment purposes. So a lot of the buildings they invest in are for experiential purposes, Topgolf, AMC theaters. So that's not really pandemic proof. And the other thing is recession proof. So a lot of these stocks that people own, sometimes you want to be aggressive. I mean, I'm not going to lie, I'm a little bit aggressive as a dividend investor. I love the high yield dividend stocks. As long as they match this criteria, this is what I like. Because remember, I sold PMT because the dividend growth and the revenue was not too hot, and it started to appear to be a yield trap. Now, if it fixes itself, that's a different story. Another thing is I sold AT&T. Okay, there is a demand. The revenue is so-so. They're good for diversification because they are a communication stock. Dividend growth, they stopped hiking their dividend. They actually decreased their dividend. And are they pandemic or recession proof? You can maybe say yes, but don't quote me on that. So that's another thing. Once things aren't recession proof or pandemic proof, you're at risk of a dividend cut. So, many stocks out there match all these criteria. And bonus points are stocks that have a stock split history, like Apple. So, they match all these criteria. I don't want to do Apple. That's just, everybody knows about Apple. They have good dividend growth. The dividend yield isn't too hot, but again, their dividend growth is amazing and they are well diversified. So I want to just add to that point with bonus points. So I like stock split history. Do they sometimes offer special dividends? That's another thing they look to for bonus points. Now let's check out this example. So I'm going to use Realty Income as an example. It's sitting at 72.70, a dividend yield of 4.09%, a PE ratio of 68 to 72, average volume 3.11 million. The market cap is 43.73 billion US dollars. G range was 62.29 to 79 75.40, excuse me, and its day range was 72.03 to 73.17, and its previous close was 72. So another thing I want to add for bonus points, if it's not doing too hot against the S&P. So in the financial sector during the pandemic, they took a huge hit. They're slowly trying to recover. It's going to take a while. So this is why people are buying real estate investment trusts a lot. So let's go over these guys. First of all, I'll explain to you why they're in demand. So here's just an example of their portfolio. The majority of their properties are leased to retail and industrial clients that have a service, non-discretionary, and low price point component to their business. We believe these characteristics are important to successfully operate in a variety of economic environments to compete effectively with e-commerce. Currently, this includes, they have over 11,400 commercial properties under long-term net lease agreements, 98.9% portfolio occupancy, over 1,100 different clients, and 72 separate industries. So I'll go over their industries as an example. So looking at all these, I swear I'm like choking on my coffee again. Right here, so grocery stores, dollar stores. Now the pandemic and recession, these guys were hit a little bit, but drug stores, home improvement, health and fitness, that was a little bit of a sector that got hurt a little bit during the pandemic and area, let's just say a certain area that got hit. So these guys show and reveal in their portfolio places that are in demand. So right here, all of these are in demand, obviously. But then I'm going to jump to pandemic proof and recession proof. So these guys have a lot of these stores that they are a major landlord to that are in demand. All right, people need stores that, companies need a landlord to pay rent, or else they're not going to have a building. So they pay these guys rent. They're pandemic and recession proof. So a lot of these places, home improvement, general merchandise, automotive services, doesn't matter. If your car is screwed up, where are you going to go? Grocery stores, people need food anyways. Pandemic or recession. Dollar stores, same thing. Convenience stores, people need that as well. Drug stores, people need their drugs anyways. And then you got restaurants, people can pick things up if they have to go somewhere. Health and fitness is, a little iffy, but their diversification is very important. So now I'm going to jump to the revenue. Revenue is very important as well with my dividend stock criteria. So let's check that out. So again, diversification, as I said, this is the real estate sector. So it's good to invest in all the sectors. So this is the revenue of Realty income. This is in millions US dollars. 2015, 1023, 2016, 1,103, 2017, 1,215, 2018, 1,327, 2019, 1,488, 2020, 1,647, and then 2021, 2,080. So you're seeing a hike in revenue, which usually there's a correlation with in-demand companies. There's a big correlation between 1 and 5 in all these. So in my criteria. So usually when there's an increase in revenue, there's an increase in dividend growth. These guys are in demand, so their revenue is jumping up. And I have my criteria that I wrote down too. It's diversified. So we have a well-diversified sector, real estate sector, real estate investment trust. So it's matching all the criteria. And that's the big thing. Now we're going to go to the dividend growth. Dividend growth is very important when I look at dividend stocks because I want to raise, you guys want to raise. So let's start in 2018. They were 21 cents. Then they cracked 22 cents in 2018. Again, these guys are the monthly dividend stock. That's what they call themselves. So their reputation speaks for itself. And then 2019, they cracked 23 cents. 2020, they're 23 cents. And then 2021, 24 cents. So they never cut their dividend. And they're hiking their dividend. They're still at 24 cents. And then 25 cents at the start of 2022, they were 25 cents. So they are hiking their dividends. Now the annualized dividend growth in 5 years, 3.04%. Big deal. They're hiking their dividend. Number of dividend increases in the last 5 years is 23. And an annual dividend, if you bought one share, you made $297 with a 4.13% dividend yield, and the payout ratio is 80%. And again, diversification sectors, business development companies, I know that's not really considered a sector, but the real estate sector, 90% of what they make basically comes back to investors. That's the rule of the real estate investment trust. If they don't do that, they're in big trouble. So now I'm going to jump to bonus points. So before I buy a dividend stock, I also look at their stock split history. So they did do a kind of crazy stock split in 2021, 1032 for 1,000, and then 2005 a 2-for-1 stock split. So they do have a stock split history, which makes these guys very attractive still with bonus points. So I like bonus points. I like dividend hikes, which is nice. Stock split history is even more attractive because you have stocks like Apple, you get more shares, then the dividend growth is phenomenal. So those are my 5 criteria when it comes to dividend stocks. A lot of you guys wanted me to really explain myself why I like these dividend stocks and the way I screen them and why I post videos. This is what I look for when I look for hot dividend stocks for you guys to check out. And again, this is not financial advice for entertainment purposes, only disclaimer in the description, but I just wanted to show you my criteria. Bonus points too, if they're not doing too hot against the S&P, that's another solid buy for me because, if they're too expensive and overvalued, that's a problem. I mean, look at IIPR. These guys, people are buying them like crazy. And Starbucks had a huge decrease in price, and people are buying them like crazy. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Wish me luck on my exam. You guys take a good one. Have a good one, excuse me. And, I'm very excited to really grow this channel and exponentially grow and do a lot of collaboration. So make sure you hit that notification bell. You guys take care and have a great Friday.